Right now, we're going to visit with Joe Connor, branch manager of Homeowners Financial Group.
That is correct. Joe, good morning to you.
Good morning.
Good news for those who might be wanting to buy a home and have had some trouble in the past getting a mortgage. It's become a lot easier suddenly. And I think I kind of know what one of the reasons might be. Would you tell us, please?
Yes, of course. You're 100% correct. There's been some recent changes that some have taken place and some are taking place later this month that have opened up the doors for quite a few people who have previously had difficulty purchasing a house, getting a mortgage.
And that concerns the credit rating agencies, right?
That's correct. So part of one's credit report up until this point has contained judgment information for past civil judgments as well as tax liens. So all three credit agencies, as of the beginning of July, have begun to remove those from reporting on one's credit. So moving forward, if somebody did have a tax lien or a civil judgment, it'll no longer show up on their credit report, which will up their score, 20 to 40 points is what's estimated. So that's a big difference for somebody trying to qualify for a mortgage.
Definitely. Now, how long does this take effect? I know it's been going on. Are we going to see the numbers go up quick, drastically, or is this something that people have to keep an eye on and it might take a couple months for this to all kick in?
Yeah, so that's a great question, and that's something that we're all asking ourselves even in the industry. So the credit agencies give you some information, but not all the information. So we've been pulling credit, obviously, this month on different buyers, and we have still seen civil judgments and tax liens coming up on the credit reports. So it hasn't just disappeared from everybody's credit, so I think it will be something that takes a little bit of time for them to update all the systems and get that stuff cleared out. But one thing for buyers to think about and to keep in mind moving forward is this change sounds great for a lot of people if they did have a tax lien or they did have a civil judgment. But when they're applying for a mortgage, they still need to communicate that to their loan originator. Because what's going to happen is even though it doesn't show up on the credit report, if there's still an active lien or a judgment, during the underwriting process, they're going to run quality control measures. During those quality control measures, it's going to actually pull public records. So if they do have a judgment or a lien, it could put the brakes on them getting that house.
Joe, during the last big financial crisis, we had a situation where somebody would come in to get a mortgage, and they would say that they drove a pizza truck delivering pizzas and made $320,000 a year.
That's a good job.
And the person across the desk would say, well, you appear to be alive too, so yeah, that'll work. How do you feel about things right now? Are we back in balance where we should be? Is there anything scary about loosening up any of these things?
No, I don't think so. Again, with the credit changes to the three bureaus, the underwriting process is still going to find out if there were judgments or liens that are open and active, and they'll still take those into consideration. There's other recent changes. They're taking place July 29th in regard to debt-to-income ratios through Fannie Mae. They're raising the threshold from 45% to 50%. That's been something that people have been talking about, and there's been a lot of articles written on whether or not that's a good decision to raise that threshold for debt-to-income ratios. But when you look at the statistics over the years, people who qualify in that range of the 45% to 50%, they have strong compensating factors, whether it's money in the bank, whether it's time on job, those types of things that offset that little bit higher debt-to-income ratio. So I think to answer your question in regards to, is the market balanced now? I think it is. I think the pendulum swung one way for a while and things were too conservative, and now we're getting to the point where things have loosened up a little bit, but not too much. People still really, truly have to qualify for the loan.
So what everybody should do today is contact Homeowners Financial Group and get that mortgage process started so you get into that home.
How do we do that, Joe?
Exactly. I think that's great.
How do we do that?
How do you do that? So you go to www.homeownersfg.com.
Excellent. Joe Connor is the branch manager of Homeowners Financial Group. Thank you so much for being on our show this morning.
Hey, put that other Joe to work, by the way. There's another Joe that works there. He needs to work a little more.
He does. I'll tell them.
Hey, tell him Mark and Ken said, get a job.
I sure will.
Just kidding.
He needs sleep is what he needs.
Java is going to be in here on Friday. He's going to beat me up. He's a big dude, too, Java.
Yes, he is.
Joe Capitano.